2 choke points shut. Hormuz is closed. The Houthis just blockaded the Red Sea. This is the tightest supply shock in months. Brent just spiked 2% to 91.22. Brent crude just hit 91.22, a 5-week high, as two of the world's most critical oil choke points are now simultaneously threatened. The Strait of Hormuz is effectively shut. And now the Houthis have declared a naval blockade on Saudi Arabia in the Red Sea. There is one danger zone and one hidden opportunity right now. I will show you both. The market is pricing in a geopolitical premium that risted energy estimates at $10 to $15 per barrel. But here is what most are missing. Every structural forecast from the major banks points to a glut. Investing.com just reported that the base case outlook sees Brent averaging $60 to $74 through the back half of 2026 on a surplus exceeding 2 million barrels a day. That is a massive divergence. Stay to the end. I am giving you 2 scalp plays and 1 swing trade you can execute today, plus the 1 headline that flips everything. Let me declare the session bias right now. This market is trending strongly bullish, but it is extended and vulnerable to a headline-driven flush. The daily, 4-hour, and 1-hour trends are all showing strong buy signals. But the RSI at 67 is approaching overbought territory and the stochastic is already flashing overbought at 81. Write this number down. If we break 89.25 today, the entire structure resets. That is the 50-day EMA and the structural floor that has held for weeks. Above it, the bias is buy the dip. Below it, we are looking at a mean reversion all the way to 87.28. Here is where the herd is positioned. Retail is overwhelmingly long after this 2% spike. The stop clusters are sitting just below 89 and just above 92. That is where the liquidity grabs happen. And just this morning, Reuters confirmed that Iran has told the Houthis to stand ready to close the Red Sea oil route if the US strikes Iranian power infrastructure. That is the fresh catalyst driving this move. Let us zoom out and read this chart properly. On the weekly time frame, Brent has been in a strong uptrend since breaking above the 200-week moving average. The monthly trend is buy. We are in a structural bullish phase. On the daily chart, price is trading well above all major moving averages. The MA20 sits at 89.78. The MA50, this is the key one, is at 89.25. The MA200 is way down at 83.68. That tells you the trend is strong but stretched. Price is nearly $8 above the 200-day. That is a significant extension. The MACD on the daily is showing bullish momentum with a reading of 0.69 and accelerating. But here is what most traders miss. The MACD histogram is starting to flatten. Momentum is slowing even as price makes new highs. That is a classic divergence warning. On the 4-hour chart, we have a clean ascending channel. The lower boundary is at 89.50. The upper boundary is at 92.50. Price is currently testing the upper half of this channel. The 4-hour RSI is at 65, still bullish but losing steam. The 1-hour chart is where the scalping opportunities live. We just saw a spike to 91.22 with a long upper wick, rejection at the R1 pivot level of 91.36. The 1-hour MACD is showing a potential bearish cross developing. This is the tension, bullish trend, bearish momentum divergence at the hourly level. Here is what most traders miss in this environment. The spot price is screaming scarcity while every structural forecast is screaming glut. Goldman Sachs just put out a note saying their base case is Brent averaging $80 in Q4 and $75 next year, assuming tensions ease. But they also said the risks are skewed to the upside. That is Wall Street speak for we have no idea which way this breaks. Just this morning, a fresh analysis from Houthi Securities flagged that the Strait of Hormuz has seen near zero traffic after the US-Iran truce collapsed. The maritime data firm Kepler reported that only 20 ships passed through the strait this weekend, compared to 130 before the war. That is a 90% drop in traffic. The supply impact is real and it is compounding. Let me connect the dots on what is actually driving this price action. The core catalyst is the US-Iran military escalation. US forces have been bombing targets in southern Iran. After President Trump warned Iran would pay a heavy price for attacks that killed American soldiers, Iran has responded by striking US targets in Bahrain, Kuwait, and Jordan. The Strait of Hormuz, through which approximately 20% of global oil passes, is effectively closed. On top of that, the Houthis have now announced a maritime blockade on Saudi Arabia in the Bab el-Mandeb Strait, the gateway to the Red Sea. This means both of the Middle East's main oil export routes are simultaneously disrupted. Here is the cross-asset linkage you need to watch. The US dollar index is hovering near 104. A stronger dollar is a headwind for oil. But right now, the geopolitical risk premium is overwhelming the dollar effect. We are also watching the 20-year bond auction at 12 p.m. Eastern Time. If yields spike, the dollar could strengthen and put a lid on this rally. The EIA just issued a warning yesterday. Executive Director Fadi Birol said there is no room for complacency on oil security amid the escalation in hostilities and a continued drawdown of available commercial inventories. The EIA also noted that Saudi Arabia's alternative export route via the Yanbu port is now under threat from the Houthi blockade. Let me give you the 1 to 2 week directional lean. If the geopolitical premium holds and EIA confirms a draw, we are looking at a test of 92.50 and potentially 94.22. If we get a ceasefire headline, or even a credible mediation breakthrough, this premium evaporates fast and we correct to 87.28 or lower. Do you think Brent breaks 92.50 this week? Comment yes or no. I am tracking consensus and I will pin the best analysis. Most people skip this section. That is exactly where the money is made. Keep watching. I am giving you 2 scalping strategies and 1 swing strategy with exact entries, stops, and targets. Strategy 1, the opening snipe, scalping, 5-minute structure. This is a high probability scalp based on the immediate rejection we just saw at 91.22 and the R1 pivot at 91.36. The trigger condition is simple. Price taps 91.36 and prints a bearish engulfing candle on the 5-minute chart, or price breaks below the 1-hour support at 90.85 at entry, short at 91.00 on confirmation of rejection from 91.36. Stop loss, 91.60, just above the R2 pivot at 91.60. This gives you 60 cents of risk. Take profit 1, 90.58. The S2 pivot and the first liquidity pull below. This is a 1-to-1 risk-reward ratio. Take profit 2, 90.34. The S3 pivot if momentum accelerates. What instantly voids this scalp? If price closes above 91.60 on the 5-minute chart, the rejection thesis is invalid and we are breaking higher toward 92. The opening snipe entry, 91.00. 5M bearish engulfing after rejection at 91.36. Stop loss, 91.60. Take profit 1, 90.58. Take profit 2, 90.34. Risk, reward, 1 to 1.0 R to TP1, 1 to 1.65 R to TP2. Invalidation, void if 5M candle closes above 91.60. Strategy 2, a liquidity grab, scalping, counter noise, 15-minute chart. This is the counter-trend scalp designed to catch the stop hunt below the 50-day EMA. The herd is long. Their stops are clustered below 89. When price sweeps those stops, we get a violent snapback. The setup requires a fake breakout below 89.25, the 50-day EMA, with a quick recovery back above 89.50 on the 15-minute chart. Entry, buy at 89.50 after a 15-minute candle closes back above 89.50 following a dip below 89.25. Stop loss, 88.90. Below the recent swing low, and the 100-day EMA at 87.12 is still far below. But we keep this tight. Take profit 1, 90.58. The S2 pivot that now becomes resistance turn support. This is a fast, singular target. Do not get greedy. This is a liquidity grab, not a trend trade. Warning. This requires fast execution. If you hesitate, the move is gone. Have your order preloaded. The liquidity grab entry, 89.50, 15M close back above 89.50 after stop run below 89.25, stop loss, 88.90. Take profit 1, 90.58. Risk reward, 1:1.8 R. Invalidation, void if 15M candle closes below 88.90. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment, for our daily. This is the high-conviction swing trade based on the 4-hour and daily bullish structure. We are buying the dip at the 50-day EMA with a wide stop and 2 targets that capture the multi-session move trigger condition. A 4-hour candle closes above the 50-day EMA at 89.25 with bullish MACD confirmation and price. Holding above the ascending channel lower boundary at 89.50. Entry, 89.50. Limit order at the 50-day EMA support zone. Stop loss, 87.28, below the key structural support that was the breakout level from last week. This gives you $2.22 of risk. Take profit 1, 92.20. The R2 resistance and the first major structural ceiling. Take profit 2, 94.22. The R3 resistance and the stretch target if geopolitical premium expands further. Trailing stop rule. Once price reaches 90.85, move your stop to break even. At 91.60, trail your stop to 90.58 to lock in profits. The invalidation level that would shift the medium-term outlook, a daily close below 87.28. That would signal a structural breakdown and a move toward the 100-day EMA at 87.12. The session SRNG entry, 89.50, for H close above 50-day EMA at 89.25 with bullish MACD, stop loss, 87.28. Take profit 1, 92.20. Take profit 2, 94.22. Risk reward, 1:1.2 R to TP1, 1:2.1 R to TP2. Invalidation, void if daily close below 87.28. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. These are fast moves and they can reverse violently on a single headline. No positions through the EIA inventory report at 9:30 a.m. Eastern Time. That is a high-impact news event that can gap price 50 cents in either direction. Stops are non-negotiable in this environment. This is how you survive to trade the next big move. Let me summarize the single most critical level for the next session, 89.25. That is the 50-day EMA, the structural floor, and the line that separates the bullish trend from a mean reversion flush. Above it, we are targeting 92.20 and ultimately 94.22. Below it, we are looking at 87.28 and potentially the 100-day EMA at 87.12. Teasing tomorrow's focus. The EIA report drops in hours with a forecast draw of 1.5 million barrels. If we get a larger than expected draw, this rally accelerates. If we get a build or a smaller draw, the geopolitical premium gets questioned and we correct hard. And keep your eyes on the Middle East headlines. Any news of a ceasefire or mediation breakthrough will flip this market instantly. If you want the full breakdown on trading commodities, the dollar, gold, and Bitcoin, the videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.